budget officials formally told Congress today that the nation is in a recession. Under last year's budget agreement, that opens the way for Congress to increase spending to stimulate the economy. But congressional leaders say they don't want to risk raising the deficit. While the Gulf War remains the wild card in predicting the economy's future, Congressional Budget Office Director Robert Reischauer says the downturn should not last long.
My discouraging assessment of the current economic situation should be tempered by CBO's expectations that this recession will be shorter and milder than the average post-war downturn. The recession should end by mid-year and should be followed by a period of solid economic growth and significantly lower inflation.
Reischauer predicts the federal deficit will reach a record $300 billion this year, not including the costs of the Gulf War. The government reported today that the deficit for December actually shrank by half compared to a year ago levels. But for the first quarter of fiscal 1991, the deficit rose to $87 billion, 23% ahead of the same period in 1990. The economy also took center stage at a hearing today on the S&L bailout. We'll have more on that.
And hopes of more credit easing lead to a mild stock market rally.
The Nightly Business Report is made possible by Digital Equipment Corporation, the company that makes all your computers work as one. The $42 billion Franklin Group of Funds, one of America's major mutual fund organizations for over 43 years. Franklin Funds are distributed nationwide by investment professionals. A.G. Edwards, member of the New York Stock Exchange, serving the investment needs of individuals and businesses through more than 400 offices nationwide, and is produced in association with Reuters, the world's largest electronic publisher, which provides NBR with news, market data, and communications services worldwide.
For the second day in a row, Federal Reserve Board Chairman Alan Greenspan hinted he may cut interest rates to help stimulate the economy. Greenspan's comments on trying to bring the United States out of its economic troubles came at a hearing on more funding to help the savings and loan industry out of its problems. Dennis Moore reports from Washington.
The Treasury Secretary and the Fed Chairman came asking for more savings and loan bailout money. What they got was an earful about the economy.
You gave a 0.5% cut, and we heralded it to the world. Too little, too late, Alan. And then you say, oh, I see some light. Oh, things may be getting better. Well, where the hell do you live that you see things getting better?
We're already cutting rates, said the chairman. We're prepared to do more.
One way is to bring federal funds rates down lower. While we know if we wait long enough, it'll eventually work, we are concerned, as you, that time is not on our side.
What about a capital gains tax cut to stimulate the economy? The president hasn't decided, the secretary said, but...
If you could assure me, Senator Mack, that you could put that proposition through Congress, I'd be the first man in line. What you can't assure me of is that in putting that kind of a proposition through Congress that you don't raise other taxes.
And the savings and loan bailout? It'll shut down at the end of February, Brady said, if Congress doesn't come up with more cash.
This is not a discretionary matter. If we do not act, depositors will be left hanging.
And insolvent S&Ls will have to be left open, losing money that goes on to the taxpayer bailout bill. Brady estimates delays from failure to pass a new funding bill last fall have already cost $250 to $300 million. Waiting another quarter would cost at least $750 million more. And to prevent that, the RTC wants another $30 billion in tax money to get through the end of September.
Congress will probably vote the money grudgingly. There's really no choice. The longer it waits, the higher the final bailout bill gets. Dennis Moore, NBR, Washington.
Another industry may soon be seeking a government bailout as well, the defense industry. Despite the high-tech war being fought in the Persian Gulf, the defense industry continues to suffer as a result of the tight economy and budget cuts. McDonnell Douglas and General Dynamics may be happy with the way their weapons are working in the Gulf, but cancellation of the A-12 fighter program here at home has hurt. Both companies have said they will seek government relief, and Comptroller General Charles Boucher told Congress today there may be more requests.
Problems such as these, particularly if they emerge in a period of more tightly constrained defense procurement budgets that make it difficult to absorb cost overruns, could well mean that we will be faced with calls for bailouts similar to that that we had in the Lockheed situation in the 1970s.
Bauscher also said a surtax to pay for the war might be something to consider, but only if the economy gets stronger and the war continues on. Paul?
After losing 43 1/4 points on the Dow Industrial Average in the previous two trading sessions, the stock market staged a bit of a technical rebound this morning, which got a helping hand from Fed Chief Greenspan when he said if the credit crunch continues, the Fed will lower the Fed funds rate some more. By noontime then, the Dow posted just over an 11-point gain as 8 stocks were higher for every 5 lower. With the help of a firm bond market and no really disquieting news from the Mideast, stocks edged still higher in mid-afternoon, pausing momentarily on news of more Scud missile attacks. But when no major damage was inflicted, the market resumed its advance, and the Dow Jones Industrial Average closed with a gain of 15.84, putting it at 2,619.06. The high of the day, 26.24, and the low just about 23 points under that. Trading volume today not quite as high as yesterday, but still a respectable 168.6 million shares, and up volume exceeded down volume by almost 2 to 1. The Dow Transport's doing well, up 9.35. Utilities edged up a 1/4 point. The closing tick is still bullish, plus 314. Standard & Poor's 500, nearly a 2-point gain, over a 3.5-point rise on the 400. The 100 up nearly 2 points. And the Commodity Research Bureau March Index down 1.90. Silver led the way down. New York Stock Exchange Index up nearly a point, over a 1.5 gain in the value line, and the Wilshire 5000 rising the better part of 18 points. Like stocks, bond prices staged a technical rebound after recent weakness. Greenspan's comments on interest rates also helped. His remarks prompted, no doubt, by the release of the Federal Reserve's latest periodic survey of business in the 12 Federal Reserve districts, which showed further clear-cut signs of weakness in most sectors. The resulting promise of lower interest rates helped tax-free and corporate bonds post closing gains averaging an 1/8, while longer-term governments rose about a 1/2 point. There we see the 30 years up 17/32, and the Lehman Brothers long bond index rose 5.87. Fed funds all over the place. This is a weird Wednesday at 11%. Of course, that's bank settlement day. And there's a new vacancy on the Federal Reserve Board. Late this afternoon, Governor Martha Seeger announced her resignation. Still ahead, an in-depth look at the stock market.
There was another day of extreme volatility today in the oil trading pits here in New York. After being up more than $1.60 earlier in the day, light sweet crude ended the session up 16 cents to close at $22.04 per barrel. But North Sea Brent rose $1.10 in earlier London trading to close at $21.50 per barrel. Roaring crude oil prices proved to be a mixed blessing for 2 U.S. oil companies in the last quarter. Texaco, the nation's 3rd largest oil firm, says profits jumped 35% in the 4th quarter to $388 million. But independent oil company Ashland says higher prices squeezed refinery margins, leading to a 1st quarter loss of $10.8 million. That compares to a $22 million profit a year ago. Texaco closed at 58.5, up 3/4, while Ashland Oil closed at 30.5, up 1/8. The Middle East conflict is sending financial markets on a roller coaster ride, and it is also interfering with the performance of routine contracts around the world. That may mean many of those contracts will wind up in court. Scott Gervey reports from New York.
The war in the Persian Gulf could also erupt in courtrooms across the nation. That is because most contracts contain a clause that allows a party to back out if what is called a force majeure occurs. The term is French and means an overpowering force or coercive power. A good example might involve a company that has agreed to pick up oil from the Gulf. It might not want to send its tankers into the war zone, and the clause might allow it to cancel the contract.
Force majeure is an excuse for not doing something related to impossibility, another legal doctrine, or frustration, another legal doctrine. I'm not sure that you will find in the shipping world